Welcome to the Open Books Podcast, where we discuss all things going on in the real estate industry, helping you take the road less traveled to real estate success, guiding you to the top 10%. I am your co-host, Curtis Haddock, alongside my co-host, Casey Tudor, Brooke Massey, and a very, very, very special guest today, Jeff Serven. Welcome to the podcast, Jeff. It's good to have you.
Hey, thank you so much.
He's a legend.
That's a couple too many varies for me, but I'm really appreciative.
I was a little disappointed in myself for giving you those many varies.
I was like, our other guests are going to be very jealous.
Very, very
Yes. Yeah.
great to be here. Thank you so much for having me.
You know what Jeff called me on Facebook yesterday?
Oh, it could be one of 1,000 names.
Oh, I saw this.
Dapper.
Oh, I saw that. Yeah, I did see that too.
I was actually gonna go with Demure, but I feel like that's been a little
I'd had to look
overplayed
that
lately.
up. So thank you.
Really?
Yeah.
I don't know.
Somebody had to make you look that dapper, Casey. I'm just saying.
Man, that's rude.
Talking about
Just
your wife.
because your
Exactly.
wife made you look that way. I told her she was in for a job, but she nailed it.
Well, she did all right.
I mean, she did what she had to work with, you know?
So
Yeah.
if you guys want to see me without my hat, you got to go look at my Facebook or Instagram post.
And apparently
Well, you're just your profile pic now, right?
It's my profile picture.
in the
But only
shocking
for a limited time.
and the shocking thing is he actually has hair.
I have some hair.
You know how it's like funny? There was like a meme where they say, those people that you always see with hats, and then
Yeah.
as soon as they take them off, they're like completely bald up here.
Right.
And I was like, I actually know somebody that's happened to
I
me
used
before.
to, when I was in the barbering world, I used to have clients that always wore hats, but they'd have amazing hair, and I would just be like,
Isn't that
"What?"
bad for your hair, technically?
I don't know, protects you from the sun.
I wear a hat all the time. What are you trying to say about me,
You have
Casey?
good hair.
You do have good hair.
So what are you trying to say?
You don't wear one all the time. You're like 75%, 70%.
Well, do you know?
I'm like a 99% of the time.
Well, do you know why?
I'm even wearing one in bed. Like I'll be in bed watching TV, and I'm like,
And you have
maybe
a
it's
hat
time
on?
to take my hat off.
Really?
Yeah, it's just I forget it's even on there. Go ahead, Curtis. I cut you off.
No, it's okay. It's okay. I'm used to it. But and let's be real. Who do I not do that to?
That's true.
I think it's just because you're
Doesn't mean I have to be a
thinking.
jerk.
Yeah.
You're thinking and you're passionate, so you're just excited to talk about the next thing.
Well, also the realtor brain we joke about is a thing for me, like big time. So if
Oh.
I don't get it out, it's not coming out.
Yeah.
and it's like I don't. Some people like are already like that, but I was never like this until I became a realtor full time.
Yeah.
And
So-
now I'm like, who?
Well, that's because you got a
Ew.
million things going around at the same. Like you got a million miles per hour with a million things going on.
Yep.
It's tough.
I have
I
10
realized-
drafts in my email that I have not completed.
I went to lunch with my old boss, and that's when I realized I was like, oh crap, I'm officially a realtor now for sure. Because I went to lunch with her and I was talking, and she just was like, I just saw her brain going back and forth, and she was like, okay, you have way too many tabs open, and I need you to finish the first one. And I was like, but there's a whole point to opening all the tabs so I
They're all
can
connected.
explain
They're all
this
connected.
first tab. And so she's like, oh my gosh, what happened to you?
Okay, well, so I'll share now.
Yeah, and
Yeah.
Then we're going to have to let Jeff say something at some point in
At
the
some
podcast.
point. Well,
Who's Jeff?
our guest.
Oh,
No, this is quick.
I'm just kidding.
Back to the whole hat thing. You know, someone with great hair like myself.
Yeah.
And I wear a hat a lot. It's because if my hair is messed up in the morning because I have to wear my CPAP machine. Now everyone knows that I wear a CPAP machine.
Now the whole world knows.
It's okay because it's
Normal.
as Jeff would say, it's very dapper, and my wife thinks so. Anyways, you
Your
know.
CPAP?
Just jealous because you haven't called him.
Your
Dapper.
CPAP or your hair?
Just me wearing my CPAP.
Dapper's
It's totally
gonna go out real quick.
not true.
Yeah.
But no, it makes it all. I can't. If I try to fix it up, I have to get it like I have to like almost like take a shower again.
Oh, dude, I used to
get it
struggle with that
fixed.
when I was cutting people's hair that wore them. It's like they had like permanent lines in their hair that you could not work with.
Oh, I
It was
hate
rough.
it. I hate it, man.
I felt bad
hate
for
it.
him.
But I can't not wear it, or else my day will be terrible.
Yeah.
Terrible, terrible. So, anyways, what should we let Jeff say?
Jeff,
Jeff,
the floor is yours.
Wait, let's have Jeff tell everybody why are you even?
Who are you?
Yeah, who are you? Why are you here? What do you do?
Yeah. Well, so the only line that I usually have in my hair is when I get it fresh cut. So when the lady that's been cutting my hair since 2005 2004,
Wow.
2005.
Good for you.
When she does that line, right? That's the only time that I have a line in my hair. But I'm with you. I mean, sometimes after you wake up, I don't. Fortunately or unfortunately, I don't wear a CPAP machine. But
Fortunately.
Maybe you should try it.
Fortunately.
but sometimes you wake up and the hair's a little bit different because you got the product in it from the last night and or the prior day, and sometimes you just got to throw a hat on when you go to the gym, right? Because I'm sure you're going to the gym in the morning.
That's what it
right?
is.
That's
100%,
you want to make sure that.
But if we're being real, if I was going to the gym in the morning, I would be showering after, and then it wouldn't be a problem.
Sure. Yeah. I mean,
I'm an evening shower person. Ever since I had kids, I became
same.
I used to do it in the morning, and now
Same.
I do it in the evening.
Yeah.
That's what happens.
I'm glad that we got 2 shower habits this early so that we can get rid of it and but I'm glad we checked that one off the list.
And that everyone now knows
that
about those habits.
Yeah, evening showers are very interesting.
People are really learning about you today, Curtis.
Yeah, and Casey.
Yeah.
Yeah.
Yeah. Okay, well, still don't know what Jeff does.
Yeah.
So let's learn about him.
We're still finding that out. It's been a few years, but I promise that I'm going to find that out at some point.
That's fair.
At some point, but to close the loop on the showers, I'm usually a morning shower guy because in the gym in the morning.
Yeah.
And then it's necessary to have a shower.
You know what? There's been studies. I've been doing this with the workout thing. Like I do random workouts throughout the day. Like they're quick, short, and fast.
You do?
Absolutely.
Yeah, this is like a thing. I saw a video too, and I was like, man, I should just start doing that.
It's because I'm so busy. Like I'll just I'm surprised you haven't seen me just get up and start doing push-ups in the office.
Nope, not seen it.
Yeah, I've seen it.
I used to do that when I brewed beer because there's a lot of downtime when you're waiting on stuff like cleaning kegs. It'd be like 20 minutes of a cycle to clean it, and you just sat there. And so I would just get down and do push-ups.
Yeah, and then if April and I are like watching a show or something, I'll get the weights out and just lift weights while we're watching. Super simple.
Nice.
Yeah.
So Jeff, why are you here?
Any habit is as long as it's a good habit.
That's true.
I can appreciate that.
Yeah.
So
okay, so let's get on to with what you're trying to figure out about yourself.
Trying to find myself. Right, we're all trying to figure out what we're on on Earth for.
Yeah.
And I'm so grateful to be on the podcast with you guys today. I've been in the mortgage industry for 22 years now. I spent took a slight break, went on to the commercial lending and private banking side, and then got back on the mortgage side to help build mortgage companies. And I've got 2 great partners, Nick Berry and Cameron Rock with Berry Rock Homes, which a lot of your listeners probably have heard of. And we're building businesses, we're creating opportunities, creating value, and that's the great thing about being a business owner and being able to help people. Right, we're here to add value, and it's not always easy, right? But we have a lot of fun doing it.
Well, I think you're doing a great job, and one of the things that I think that is, confusing, I wouldn't say confusing, is unknown by the consumer, and really by a lot of realtors too, is, you're a mortgage broker, right? And tell us what is the difference between being a mortgage broker versus being just a lender at a traditional bank. Help us understand what's the difference between the two.
Yeah, absolutely. I've been, like I said, I've been in the business since '03, and I've been on all sides of it. Right, we were, traditionally, before the crash, we were mortgage brokers, and then at '06, '07, '08, we became mortgage bankers. Right, not at a bank, but we were closing our own loans as an independent mortgage banker. I ran a mortgage department for a bank up in Kansas City at one point, so I've seen all sides of the lending process. And when we got back onto the business back in 21, we looked at traditionally companies will start as a mortgage broker. They'll build, and they may go to a mortgage bank where you're facilitating and you're closing your own loans. You're taking on additional compliance risk. You're doing a lot of things. There are good things about each execution model. So I'm not going to tell you which one is better. You have to decide that as what execution model that you want to be when you're getting in the business, right? We've chosen the mortgage broker model because that model has changed dramatically since the old 2004, 2005 era, where it was just fog of glass or fog of mirror, and you're getting a loan, and the unscrupulous lenders that were out there, right? Mortgage brokers took a lot of heat for that. Not going to get into that conversation. That's a whole different podcast. That's a whole different podcast.
Do you know how many lenders went to jail during that time period?
None.
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 Because it was like it was just like a practice that wasn't regulated, so they could do it.
Yeah. Well, and at the end of the day, it was. You can trace it all the way back, right? Because you had, I'm not going to put this on consumers, but you also had consumers writing down on a piece of paper, I make $8,000 a month.
They only make $4.
Doing X. And it was an obvious lie. Now, were they coached to do it? Sure. Right. So the consumer was only given options and opportunities, right? That lenders were like, if you just do this, then you can get a loan, right? So you had people that, so we had loan options, right? And then Wall Street was just like, we're just going to sop up all this paper, right? Mm-hmm. But what happened was they didn't take the credit risk, right? The credit risk was completely different. They were saying the person that was writing on a piece of paper was the same risk as someone that was W-2'd, had a lot of money, had a large down payment, right? So that's where the main issue was. But
what's the difference though between the I know we don't want each one has its advantages and disadvantages and things like that, but what does a mortgage broker do versus a traditional lender at a bank?
Yeah, so one of the ways that I compare this is, do you, homeowners insurance, right? You can call someone that is an insurance broker, and they have access to 20 different companies to shop rates, to find different solutions that may be that may fit your situation better, because everyone's situation, you guys know this, everyone's transaction is different, right?
Oh gosh,
it can be very, very vanilla, but even the vanilla has French vanilla and
vanilla bean,
all of those things, right?
That's my favorite.
I love vanilla bean.
That's true.
So
vanilla.
I said it.
True vanilla.
Agreed.
But the difference is that then you've got a State Farm agent, or pick a captive agent, sure. Right? State Farm's a great company, but
it's different. You're explaining the difference.
You're able to shop around and have a lot of optionality, right? And the main difference between brokers and a banker or an independent mortgage banker is where the loan closes, right? So the loan doesn't close in our name. The loan closes in the investor's name that we submitted. And the main difference that we've seen on the broker channel is that those lenders have now they're pouring resources into the broker channel. They're pouring resources into all of the people that work for our companies, right? They're providing a lot of additional things that are helping them build their business, because the only way those guys are doing business is if we're sending them business, right? So we're getting a lot of education, a lot of marketing, right? A lot of those things. And the statistic is out there, we can look it up, but typically on the broker channel, right, rates are a little bit lower because we don't have the overhead that a lot of the other companies have, right? We don't have the layers of compliance. We're not paying underwriters. We're not paying all of these people, right?
I heard the opposite sometimes, is that the broker side is a little more expensive.
Yes.
Yeah.
So on average, you would say that the mortgage broker side is not as expensive because they don't have all the departments to service the loans and all the overhead.
Which makes
and all that
complete
kind of
sense.
Yeah.
Yeah,
Interesting.
absolutely. So typically, right? I mean, and there are
exceptions.
there are banks that will undercut a rate, right?
Sure.
There are different strategies to buying bulk, bulk amount, right? Something that is a forward commitment for a bank where they can then come in and undercut. But typically, we see interest rates between a quarter and 50 basis points lower.
Mm-hmm.
We see about a $10,000 average savings, right? That's the HMDA data that we receive is that it's about $10,000 cheaper. So
Interesting.
it's more flexibility, right? It's quicker, right? For instance, our submission to clear to close is an average of 14 and a half days, right? So in the situation where we need to be very competitive, right? We all remember 21 and 22,
Yeah.
right? Where it's 15 offers and we have to be able to move quick.
Yeah.
That's one of the differentiations
Sure.
that we have.
What takes the bank longer? Just all the approval processes from different hands on it, or what?
Yeah, I think there's cogs in the wheel, and they don't like to get those things. Something goes in, and they don't have the resources sometimes, right? And again, there's nothing wrong with banks. There are a lot of really good bankers out there that are doing a lot of volume.
Yeah, we've experienced that
are doing really well by their client, right? This is just the model for us because of the way that we want to add value to our clients.
Sure. Well, so explain the difference too. On that same note, like employment status, which my understanding, and correct me if I'm wrong, is that if you are working under a bank charter, then there's a good chance that you're probably getting some sort of draw or a salary of some nature, whereas and you don't have to pass the test to get your mortgage license, and so you're able to come in and start doing loans. Whereas on the mortgage broker side, if you're dealing with a mortgage broker, whoever you're dealing with had to pass the mortgage broker's examination. But employment status wise, like, do you see more lenders on the bank side that have some kind of salary, and so their commission is not with a commission, but it's not as high as what you would see on a mortgage broker side? Is that a fair statement or a true statement? Or
I haven't been on the bank side for quite a while. I think that typically loan officers are going to be paid what we call basis points. Right. So
regardless of what side you're on.
Regardless of what side you're on, right? And there are a lot of different strategies when it comes to that. The important thing is to find the strategy that works for you and your company, right? Find a strategy that is going to entice loan officers to want to work for you, right? At the end of the day, mortgages, for my purposes, it's a commodity, right? At the end of the day, the mortgage that you sign at closing is the same mortgage that you can sign from our company to a bank, to an independent mortgage bank. To the guy down on the street, right?
Yeah.
I was driving here today, and I drove by 3 places that you could get a mortgage from, right? So the supply is there. It's a matter of who you're going to feel comfortable working with, right? It's the same thing on the real estate side, right?
Makes sense.
We're trying to add value in a different way. So, but as it relates to compensation, there are a ton of different compensation models, right? If you work in a lead generated shop, you're going to be paid differently than if you're bringing your own business.
Well, the reason I bring it up is, in my experience, I typically, and this is not to all bankers out there, because like you said, we have actually experienced some incredible lenders that work at the bank. But in some of my experience in the past, when I dealt with clients that they want to use the lender at the bank that they bank at, it seems like it's more of it was like a 9 to 5 job. They don't work on weekends. Whereas the mortgage broker, they're gonna pick up the phone just like a real estate agent would at all times of the week
because they're on commission.
I always felt like it was because of the commission, and they want to get the deal closed. Not that the banker doesn't. But it just seemed like there was more security there, possibly, as to because why can't I get a hold of you at 5:30 for a question, or get a pre-approval on the weekend when I got someone who wants to write an offer today? That's been my experience with some banks that I've dealt with.
Yeah, that makes sense.
Yeah, so that's I like to look at it, and paint a broad brush, right? I think that is more about the person. Sure. Than the place that they work, yeah. Right? The avatar of the type of person that a bank hires, and the avatar of the person that we hire, right, is what contributes to that, sure. Right? I know that there are brokers out there, there are mortgage professionals out there, right, that are exactly that way, yeah. That are 9 to 5, 8 to 5, and I'm in my box, and I've built my business that way, right? That's not our culture, right? Our culture is, and they're very successful,
sure,
right?
Sure. You can set the expectation, and that's what it is.
Right? Absolutely, yeah. Right? The culture that we bring is to be there for your client. Right. And the way that we define client is a little bit different than I think where other people define client. Right. So in our world, the client is the realtor. Right. Mm-hmm. Realtors are top of funnel for us. Right.
Your client, for everybody,
your client,
yeah.
Right, is our customer. You are our client. We are technically a vendor, right? And this is the methodology and the way that we look at things, right?
Yeah. Because it makes complete sense.
What my role is my client is all the employees that we have in our organization, in our enterprise, right? So I deliver value to them so that they can deliver value to their client, which is in our case the real estate agent.
Yeah. I have a question.
No.
Yeah.
Only I get to ask the questions here.
Okay, here. Should I submit it?
Yeah,
telephone it.
Write it on a piece of paper.
He'll get some random question by the time Brooke gets it. Okay, so how do interest rates work? So, because you can look up, hey, what's the interest rate going these days, and it's not always what you actually get. How do builders, whenever the going rate's 7%, how are they doing 4.99? How does all that work?
Loaded question.
Yeah.
Yeah.
Well, we have time.
It's a great. It's a great question, and it's one of the ones that has the least amount of transparency in most people's answers, right? So what we see, and it is a complex question, right?
Sure.
I used to get the question all the time of, that's the first thing on the phone is, hey, what's your rate? Because that's what people are shopping.
Yeah.
Right. That's what people think.
That's right.
That is the most important thing about their loan process, thing. Right? Mm-hmm. So I'm going to answer your question, but since we have the roundabout time, I'm going to walk you through it. So there are a number of things that will impact your rate, okay. Right? So the type of loan that you have that you can qualify for, right? So, at our companies, we have all the traditional products, right? Conventional, VA, FHA, USDA, right? And then we also specialize in non-QM loans, right? We have a cash offer program, right, for people, right? So what it comes down to is it comes down to the value that you're able to add, right? How quickly can you get things done, right? What is the service level, and then absolutely what the rate is, right? So some of the lenders that we work with, right, when we look at rate, we're actually looking at payment, right? Because most people want to know your interest rate, but they don't realize that there are other factors that are going into it, mm-hmm. Right? So when somebody quotes you an interest rate on the phone, right, number one, they probably shouldn't do that because there's some fair lending laws and things that they need to follow.
Well, and that's a loaded question.
Right. And it is a loaded question. So, right, so the loan type, the loan product, your loan to value, right? How much of a down payment you're putting, your credit score, right? And then the lock period, right? So most, and this is another, variance between brokers and bankers for a lot of times, right? And I won't say all brokers, right? I'll just tell you about how we operate, right? So we have the optionality to give exact interest rates, right? Because what we find is that people care about their payment more than they care about what the actual interest rate is. So interest rate is a factor, but there are a lot of factors that are going into it, right? Sure. So we look at, hey, what is your goal, right? Your goal isn't to achieve a 5.75 interest rate. So if I tell you what our interest rate is, and it's 5.75 in that instance, that doesn't give you anything, right? So it's about connecting with the customer to say, well, and find out what the goal is.
Well, you can't take a percentage to the bank, but you can take a dollar amount, a monthly payment, and deduct that and look at it that way.
Right.
There's more value. There's more value in it.
Yes.
Yeah, absolutely. So, what we're looking at is we want to hit that goal. So we can, again, we look at the lock period, right? So most institutions only offer a couple of different lock periods, right? They offer a 15-day lock, they offer a 30-day lock, they offer a 60-day lock, right? We actually get down to the day, right? And sometimes that matters, right? If we're going very quick, right? You've got a contract that we've got a quick close, right? We got to close within 21 days, right? So why would the customer want to have their interest rate locked for 30 days when in essence, right, they only need 21?
Because it's security.
Right? So, but 30 days is going to cost more money, right? So when we lock an interest rate, it's how long, right, and all of the borrower characteristics, and then how long we have to lock it, right? So when you're guaranteeing something for longer, then it costs more money. So if we can shorten that term, shorten that lock period, right, it's a better price for the client.
How long can you lock something for?
So there are extended locks, right? If you're doing construction loan or something like that. Typically, your long-term lock is 120 days. Okay. Not sure why you'd typically do that. Yeah. Most transactions, I look at things, and any of the loan officers that work inside of our companies will tell you this, right? We look at rates as a marathon. You guys look, and the customer looks at them as a sprint, right? Because they don't care about what rates are going to be in 6 months. They care about, I'm in the transaction, yes. I'm in the sprint, right? So what are interest rates doing right now, right? So we look at them as a marathon, right? So we look at all the trends and how the Fed's going to impact that, and all of the other things that are happening in the world today.
With Casey's question, I'll expand on it a little bit and correct me if I'm wrong. I think, and you too, Casey, correct me if I'm wrong, you're wanting to know like how it works as far as like how do you determine what you can offer, and then how do people, like, let's say there are, we see it all the time, special deals out there where like if you use our preferred lender, then you're going to get a better rate. So, but it starts with, though, you're shopping as a mortgage broker. You're shopping from your different investors to try to figure out which situation meets the customer's goal the best. Not necessarily, the customer would say, find me the best rate, but then after you talk to them about their goals, I would say you're shopping to find the best product for that particular borrower. Correct. And so let's say you find it. So it's really, the rate initially comes from the investor, correct? And the investor gets it from the marketplace. So the market, as in, how's the economy, the market, like what are they able to borrow money from? And typically, obviously they're going to have a spread on that, and they're going to have a minimum that they're going to want to make when they loan money to the mortgage broker side. Is that a fair?
That's in contract, right? So interest rates to answer the second part of the question from earlier from Casey of where a builder can offer a low interest rate because of the relationship that they have, right? So those are joint ventures or marketing service agreements that a builder may have with an individual lender, right? And RESPA does allow it, right? There used to be a lot of things that that people would get all up in arms at, right? Those are certainly joint venture opportunities, right? We do some of that as well. So what not to get too technical and in the weeds on that, but what happens is that bond prices are where interest rates really come from, right? So if you do a forward contract, meaning that you're guaranteeing to deliver a certain amount of loan volume, right, you can bulk purchase that at a discount, right? So if, for instance, the way that they offer the 4.99 in your example, right? Let's say interest rates are at 6 and they're offering 4.99. Mm-hmm. That means that the bank that they have worked with or the lender that they work with or something has done a forward commitment, and usually forward commitments are about $100 million, right? Let's just use that as an example. Yeah. So they have guaranteed a forward contract of $100 million. Okay. They're going to fill $100 million worth of loan volume in that contract period of time. So that's buying based on the bond
at a certain rate.
At a certain rate. Now you buy based on the coupon of the bond. So that actually has a number of note rates inside of it. So not to get too into the secondary market piece of it, but so you buy it at a certain bond, and then you're able to offer that so that you can fulfill that contract. Usually that contract is 120 days or 180 days or something like that. So you've got the ability to lend out all of that money, right? So you're talking about large aggregations at that.
If that builder does not fulfill that whatever volume that they did, could that be pretty pricey for them?
So typically it's not on the builder, it's on the institution that provides that. Yeah. But pair off costs are absolutely, can get very, very costly when you're talking about that. Yeah, certainly.
That makes sense.
That makes perfect sense.
Which is why also you only see the really big builders doing it.
For sure. Yeah. Well, something else now that we've kind of talked about the differences between mortgage brokers and bankers, and I really like how you broke it down, and because it's true. I mean, there's positives and negatives to both, and it really comes down to what's best for the customer. And I think that's what I really appreciate about you, Jeff. When we talk to you, it's like you're very because you've seen it from so many different sides. You really are looking out for like what is this person's goal? What product is best for them? And to go as far as saying, like, I have seen you lose a deal or give up a deal because you knew what product was better for them wasn't what we had, and so I do appreciate that. One thing that I think would be good to talk about before we wrap it up is what would you say are business activities that you guys are doing to get business in 2025 that you weren't doing as just even in 2024? Like, what has changed in this marketplace for what we are offering the consumer and how we are going about getting more transactions?
Yeah, that's a great question, and I really appreciate you asking that. And just to dovetail on what you had said earlier, right? It is truly about what is going to be best for that customer, right? There are many occasions that we have advised clients to go with someone else because of an offer that they're able to get, right? It truly is about adding value. I think there's more value there than trying to convince someone that what we have is better, right? We're not always going to be the best, right? but it's the old adage of, what do you want? Fast or cheap, right? You've got to start picking out what you want.
Yeah.
And when what they want doesn't align with what we're able to offer, it's very easy to say you should absolutely stay with the lender that you've got. So, but to the question about what we're doing different, right? I think we always have to continue to evolve, right? There are always ways to get better, right? And what I preach to all of our people is you need to be adding value, right? And to take it a step further, it's that selfless value, right? So it's doing webinars, doing Zoom meetings, doing team meetings that you're going over products, right? You're educating your referral partners, your realtors, your CPAs, attorneys, right? You're helping them be more knowledgeable and helping them navigate the environment that we're in, right? So a couple of the things that we're doing different this year, we have some tools that one of our wholesale lenders have given us, and it's called a home value estimator. Right, and traditionally, the way that I looked at that was, hey, we're gonna provide this when our client and our customer, right, the real estate agent and the customer are getting ready to make an offer on a house. They're saying, hey, all the data that we've got, man, is this priced right? Right. So we pull this home value estimator. It adds additional context and clarity for what they're trying to do. That's something that we've been doing for a long time, right? But as we all know, right, 2024 was the slowest year on record when you factor in population, right? 74% of real estate agents didn't do a single transaction, right? So what we were looking at is there was some downtime, right? We had some extra time on our hands, so we were looking at how do we add more value, right? How can we take the technology, the tools, all of the things that we have, and how can we use it differently, right? So I've got if I've got time for a story. So I've got a grade school buddy of mine that's been.
We're just out about time.
I've got a grade school buddy of mine. Sold me my first house. Right, he's been in the business a long time. Right, bought my first house in 2004. So he's been in real estate, longer than I've been in mortgage. And so I always bounce things off of him, and he was talking about going on a listing appointment, and I said, what if we use this tool? Like, what if I provide this tool for you to help you give more value to that client of yours so that you can win that deal, right? So we pulled the home value estimator. It provided him more data to go in and talk with the client to be able to market that property a little bit differently. So it's a differentiator for him, right? That's where I get that selfless value, right? Because
help me get more listings, please. Yeah. I'll take more listings all day long.
So here's the light bulb moment, right? That's a guy that we're working with. Well, there are a lot of realtors that we want to work with. So one of our execution strategies is to send that to current listings of realtors that we want to work with, right? And say, hey, this is something that we're doing for our top agents, right? You're a top agent. We want to do business with you. How can we add value? Let's sit down and talk for a few minutes about this. And would this be beneficial for listing presentations, right? So being able to add value at any part of a transaction, even if it's not your transaction, is the way that we've evolved that technology.
Realtors just want friends. I mean, honestly, like if they're out there, I mean, it's a lonely world for realtors. And if they can get on the phone and talk to their lender about a dang listing appointment and a value, I think that's a great tactic.
Yeah, you hit it exactly right, Brooke. It's we're all trying to do our best, right? And it is lonely out there, right? It is.
All of us are trying our best.
74%.
Maybe not the 74%, but maybe those people, right, could utilize this
Sure.
to
Oh,
be
they didn't know
able
about it.
to change it,
To
right?
piggyback on what you're talking about, a lot of agents that I saw, so I came in at a good time 10 years ago because you could learn organic growth in your network, but also that's when technologies were starting to become available. So slowly implementing those things over the years. But what I noticed was there's agents who've been in this 20 years plus, and they just got out of the business. Some of them went back to nursing after 20 years of real estate because they did not know how to do anything other than just wait on those phone calls, and that worked for 20 years until last year.
Yeah.
And then they went broke. And so, yeah, spending that downtime learning the new tools and software, and that's what we've been trying to do here is try to take ourselves to that next level so we can be in
Advance.
control all
Yeah.
the way.
Yep.
Yeah. You talk about technology, right? We're all hearing about about everything that's going on, technology and AI and all of that. And I hope this isn't breaking news, but realtors and loan officers are not going to be replaced by AI.
No.
But
What?
you
People are
will
too emotional.
but
They
you
need
will
Be replaced if you don't use it.
be replaced by a realtor and loan officer that is using AI.
Yeah.
If you're not using AI in your business, you are not going
Even a
to
year or
win.
two ago, I wouldn't have agreed with you on that because I'd say, well, there's plenty of realtors out
'Cause
there
it-
that are doing massive volume and not even on Facebook. But now that I'm using the AI, I 100% agree with that comment.
Yeah.
Oh,
because
yes.
the amount of work you can get done quicker, and what people don't understand about using the AI and is what we're learning is it's more of a thought partner. It's not really you doing your job. You have to know what you're doing up front to help coach it to get you the results that you need.
Oh, I always argue that because so many people, they just want the instant where they want to hire somebody to do it. And I'm like, at the end of the day, we're all independent business owners. Not anybody is going to do business exactly like you. And I think if you understand how, sure, you can have somebody help build out part of it. I'm not going to argue that. At least get the skeleton of it, but you still have to understand it to make it
Do what you wanna
tailored
do.
to
Yeah.
your life, but AI, it's like another assistant. So yesterday I was making a smart drip campaign, and I wanted certain episodes of our podcast. Well, we've already recorded a bunch of podcasts. We're on multiple streaming platforms, and so I had it match certain episodes to my emails, and then it gave me all the links directly to those episodes. You know how long that would have taken me if I built all that out and thought it all myself? Because I always stump at that if I have to get creative, especially with words, But Chat GPT, I was like, this is what I want you to do. This is the tone. Here's the prompt. And
Here's the
5
episodes.
seconds, I was done. And so all I had to do was just go implement it.
We need to save some of this conversation for an episode about AI because we
Sure.
haven't done that yet.
Sure.
Well, yes, I think we're all us three in particular really
Yeah.
getting into it. I don't know why, but yesterday, all three of us, I don't know if you noticed, we're all in AI,
AI.
on different
That's right.
things. And then I got so addicted. I went home and I kept going onto AI. But anyways,
I went from zero on social media, presence as far as the quality of stuff I've done.
to 1,000.
Yeah. And don't get me wrong, this last
You've
month
done
or two,
research.
I've done nothing but research it
Yeah.
all day and all night. But that
Makes
it still
difference.
saved me years.
But
Or,
it's
or thousands of dollars in paying someone to edit those videos for me.
It's always just a hump. People just don't want to learn everything.
That's right.
Take that time.
And it's just take the time. Don't stress out because you don't know everything. And I was actually thinking about this morning. I was like I don't. People should be more. They just need to go ask more questions and don't be scared to meet people. Seriously, because that takes you so far in life.
Right.
But anyways.
Thanks for bringing that up, Jeff.
Yeah, absolutely.
Obviously, we all three went on a rampage. So.
Right. No, so it's really about just to kind of circle the loop on your question, Curtis. It's adding value is something that you have to be doing, right? So we can add value in the ways that I talked about from the home value estimator, being able to add value by having more time because of AI, and then one of the other big changes that we've made or evolved is having an accountability partner. Right. I think that's so important. And what we have, I'm kind of a freak about all of this stuff, right? So I've got a business coach, I've got an accountability partner inside the organization, and I've got an accountability outside the organization. And
I'm so proud of you.
I encourage. Thank you. I encourage people to have an accountability partner that is outside of your industry, right? Have one inside of your industry as well, right? But have one outside of your industry, because they're going to give you perspective that nobody else is going to give you in this industry.
Yeah, because within you can get tunnel vision and just focus on that, but you do need that outside voice to see like what the public is looking at you and how you're doing things.
Yeah, I would say that a large part of our success in the mortgage business is because I have two business partners that are not mortgage guys, right? I've made them take the test, though, right? So they're licensed now, right? So
we can't be partners if you take this test.
So they have that knowledge, right? But they're not mortgage guys, right? And what that does is that brings such a great perspective to it. It allows me to kind of step back and like you just said, get rid of that tunnel vision, because when you're in mortgage, when you're in real estate, you're in that all day long, right? And you're focused on those things. So being able to pull out of that and have, it's when you are talking to someone and they take you off center, it allows you to really think in a different way. And that's what I find is extremely helpful, and what has catapulted what we're doing because of our execution based on being able to think about it outside of traditional methods.
Yeah, nice.
Mic drop.
Thank you, Jeff.
Can't drop these mics.
They got weights on them.
Yeah.
Big weights.
Yeah.
You can lift them though.
I mean, we'll do a micro workout later with our mics.
Lauren, did you have a would you rather for us?
Let's see.
Would you rather use a mortgage broker or
I was gonna ask, would you rather have French vanilla or vanilla bean ice cream?
definitely vanilla bean?
Vanilla bean. Listen, if it doesn't have
But do you know
a
how many
bean,
people don't even know about
then
vanilla
it's
bean?
not vanilla. Well, it's not
Hey,
real
I
vanilla.
didn't know about
I
it.
know.
Yeah, if
it
there's-
doesn't make sense.
I grew
Real
up.
vanilla is the bean.
Right. Jeff, do you eat vanilla bean?
Yes, I do.
I was like,
I'm
Jeff
more of
is
a-
bougie.
more of a
Ask
vanilla
that
bean. Right.
He's bougie.
Yeah.
Purist.
Okay,
Vanilla bean means you're bougie.
I don't know if I think this would be hard for me, but
Okay.
would you rather travel the world for free
Ooh.
for a year or be given $50,000 to spend however you please?
Would you rather travel? Is it all expense paid for the?
It
Would you?
just said,
Would you?
rather travel?
Would you
Okay.
rather
the
travel?
world for free?
Would you rather travel
So
the
I'm
world for
assuming
free,
Everything is free.
For a year,
or would you get
For a-
$50,000 cash to spend how you please?
Travel the
Travel
world.
the world.
Travel the
I can
world.
go make
Free.
$50,000
That costs you way more
next
than
month.
$50,000
Yeah.
to do that.
You made 50,000 last month, so
Well, not quite.
but close enough.
Well,
to
and
where
if
that's
if you're watching and you don't know how to make $50,000 a month, you can sign up for Books Real Estate Academy
Our
for
coaching.
$50 a month and holler at one of us and we'll teach you.
$50 a month and go make $50,000 in a month. Well, that's a good ROI.
Fitty fitty. That's the best 50-50 chance ever.
Ooh, I like it. I like it. 50-50.
Huh?
Cool.
50-50.
Fitty fitty.
Fitty.
Casey, I've got a different would you rather
Okay, let's hear it.
for you.
Okay.
Oh,
yeah.
just for
Specifically.
Casey.
Just for Casey.
Okay.
Casey.
Would you rather have a zero sugar Dr. Pepper blackberry,
Oh.
or
I knew
would
you
you
were gonna
rather have a zero sugar Dr. Pepper strawberry and cream?
This is
If
like
you
Can
want
I
to
be
share, if you want to
honest?
share the backstory of it,
This is
before you
like-
answer.
Can I be
Tried it.
honest? They're both bad.
I was like, this is like some hipster stuff.
So for those of you who don't know,
Nobody knows.
I quit drinking energy drinks like
for that
6
part,
months
yeah.
ago, but I still have the occasional diet Dr Pepper, and so I had a blackberry one, and
It's not Diet Dr Pepper. It's zero sugar.
yeah,
There's a
sorry,
difference.
yeah, zero sugar, Dr Pepper zero, and Jeff came in and said, "Ew, you shouldn't drink the blackberry one." I said, "I know it's disgusting." He says, "I'm going to bring you a strawberries and cream one," and he did.
There it is.
And he did.
And it says, and he still thinks it's gross.
It's-
right to Jeff's face.
Well, so-
Rude.
Yeah, it's definitely neither one is phenomenal,
Right.
But on the scale of
Strawberries and cream is
yeah,
better.
there you go. All right,
Yeah,
that's the
to
answer.
answer your
He's
question.
like, just
That was the
just
validation
please
I
him.
wanted.
Yeah.
Yeah,
Yeah.
no, you're welcome.
Yeah.
I got to make you work for it, dude. I'm just going to give it to you.
Yeah, right. I
You know?
appreciate that.
Would you
So-
rather have a full head of hair or
Okay.
Just okay. I feel like that's
Or-
every man's response.
I don't have the or.
No, I liked where he's going.
Or I don't know. What should the
No,
or
I think
be?
a good one would be: would you rather be bald and have a spectacular beard,
Oh, okay.
or would you not be able to grow a beard and have a
have
really
very
good
good
set of
hair.
head?
Oh.
Oh, hair. Have a good set of hair.
I think I would. Well, I guess the question.
like I
becomes,
can't
is
answer
how
this
ugly
one.
is your face? Because sometimes you might have a
Wanna
really nice
cover it.
head, but not have a nice
Sure.
face. So that's
That's
hard
fair.
to answer. That's actually a good one.
Let's just say that you are confident in who you are.
I'd
and-
rather be a Ryan
Okay.
Gosling or Brad Pitt and have a really good set of hair and not be able to grow a beard.
Me
But
too.
I've also had a beard for 20 years.
I think I'd rather just grow my hair.
There we go, Brooke making her own rules again.
Yeah, that means it was a good one. So we're on track.
I couldn't play.
You could because what would
I
you
mean-
rather have?
Yeah.
I mean, that's why I said I'd rather have hair.
Okay.
If you grew a beard, you could
I
go
didn't
to
make up
Walmart and
rules.
fit
I
in.
answered the question.
Well, the way you phrased it, I thought you were just saying I'd rather be able to grow hair wherever I want.
Oh, yeah, no, that'd be weird too.
But can I give you a little bit of, on the other side?
Oh gosh, I'm nervous now.
P.T. Barnum wouldn't have accepted you if you wanted nice hair.
You know, I'm okay with that. I'm okay with that. I'll just attend the
That's
show.
that.
I'm a
But back in
watcher.
back in the day, that's a lot of potential income.
I mean, that's true. I mean,
what if
did
it was
they-
$50,000
did
a
they
month? Not to
have
bring
real-
that back in, but
Was real estate agents alive then?
I think probably a lot of people were alive then.
Well, I know, but we're real estate agents.
There's always real estate.
So, I mean,
I don't know how
would've been
people. I don't know how people bought and sold houses back then.
Well,
I,
you know,
I haven't been in the
could.
business that long.
Well, I mean, don't you read history books?
I do.
What does your
but,
coach teach you?
about history?
Yeah.
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 Actually, the book I'm reading right now
Curtis
is
tells
about
me all kinds of
Abraham
stuff.
Lincoln.
See? Well, and he didn't tell you how real estate operated back
No,
then?
we haven't gotten to that chapter yet.
Oh,
yeah,
got you.
We're still in the war right now.
Come back next week.
I was going to say 1900s when it started.
Yeah, the profession of real estate broker began around 1900 in the United States. Since then, profession of real estate brokers has flourished in the country. The initial home sale records began in the United States in 1890. It was an attempt to create the first real estate associated in the United States.
So when
not
was
great
P-
information, but
So when was P.T. Barnum a thing? Like the 1920s?
I'm doing it just like you asked. A thing.
But you didn't say when.
1810 through 1891.
So he died right when they started selling real estate.
Wait, women back then, I mean, we would just be having babies anyways, so it'd be fine. It wouldn't even matter.
Okay. All right, guys. Well, hey, as we wrap this episode up, I just want to thank you for listening. Please like, subscribe, click the bell, and join us on our next topic. And we're signing off. I'm Casey Tudor. This is Curtis Haddock, Brooke Massey, and Jeff Serven.
I couldn't do it.
I was like, why would you give him my
Yeah, I couldn't do
exit?
it. I couldn't do it.
I had to.
I thought for sure you were going to go Jeff and then finish it.
No.
Brooke. All right. Well, we just lost it.
Not my fault. Adios.